up, guys? What up? What up? What up? What up? You know how we do. Finna do some analysis on US30, NASDAQ, S&P 500. What up, guys? What up? What up? What up? What up? You know how we do. Yeah. Let me roll up some weed, man. Let me roll up some weed, man. All right, so let's get rid of this MACD. Right. All right, so let's get rid of this MACD. It's inversed, by the way. So up. All right, guys. So let's go on the daily chart for the NASDAQ. All right, then we're gonna start drawing these zones. Boom. 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 We're gonna start drawing some bank zones here. Bank entry zones too. Right. Yes. So we're starting off with the bank zone. So let's talk about what happened, last week, right? So let's talk about what happened last week. So last week was really bearish, all right? Last week was really bearish, okay? Sold out from Monday, come straight down to Friday, all right? Economics, there was like Powell speak last week too, so yeah, there was a lot of economic shifts. So let me see these here. All right, yeah. So we got the chart the right way. All right. So yeah, guys. See some people join up. Yes, sir. All right, guys, just waiting on everybody. Waiting on everybody. Waiting on everybody. Waiting on everybody. What's good, bro? Um. Yeah, bro. So we finna start like in 10 minutes or so, right? We're gonna start in 10 minutes. You know, I'm just sending out the live, right? I'm sending out the live to everybody, bro. So just give me a second, hang in there. You feel me? We're gonna go over a lot today, right? We're gonna go over the basics. You know, you say you're fresh in the game, so we're gonna definitely go over the basics, bro. So just hang in there, bro. Sending this to everybody. All right, so we got Nicole in the building. Yes, sir. All right. Sending this out to everybody, bro. 1 second. So yeah, last week was really bearish, right? Really bearish. You know, so like how you're the only one in the live stream for now. We can go over some basics, right? So the introduction to Forex, bro, you're gonna need like a year or two on a consistent level, right? It's gonna take some trials and error, but you know you're gonna get there, right? So what I suggest you start learning, right, is like basic support and resistance, right? Support and resistance. You choose what you want to trade. So I trade NASDAQ, right? You can follow me and trade NASDAQ. So support and resistance. Support and resistance is where the price makes decision, right? So right here is where the price decided to shoot down, right? Decided to shoot down from up here. So up here is a level of support, a level of resistance, right? So this line right here would be marked, because anywhere the market reversed one time, it's going to reverse there most likely again. So that's what we use to really navigate the market, right? So you see down here where price rejects right here, right? And then it rejects right here, right? And then it rejects right here, right? So all of this down here is a level of support, okay? So all of this right here is a level of support. Yeah, man? Yeah, so you simply just keep it simple, bro. Let's try to find out what is a support and resistance, key levels, But let me roll up some weed, bro. Let me roll up some weed, and we're gonna get into what we think NASDAQ is gonna do for this week, right? So yeah. So I'm on the daily chart right here. We're at a key level. We're at a key daily level for the NASDAQ, right? So price came here once, reversed, right? Hold on, let me get a highlighted. Price came here once and reversed, right? Price came here and reversed, right? Right? Price came there and reversed. Price came here again and what did it do when it came here and when it came here? It reversed every time it came to this spot, right? But what I am seeing is that it doesn't necessarily is gonna turn back right here. It can break this level right here. All right. So we're definitely in a position to go both ways, as everybody is saying, right? So we need to see the market bounce off here like it did before, bounce off there like it did before, or we want to see it disrespect this level right here, right? So we want to see it drive through it, then come back, then go down, right? So that's what we want to see. We want to see it break it, right? We want to see it break it, or we want to see it respect it. So if it respect it, it's going to do something like this. Boom, boom. What it did here, it did this. Boom, boom. What it did here, it did this. Boom, boom. So that's how we find patterns, right? That's how we find patterns. That's how we find patterns. That's how we know which way the market is most likely going, right? So simplicity, you feel me? That's the key. So as simple as that right there. So what I'm gonna do here, I'm gonna finish marking my daily key levels, right? Marking my daily key levels, my daily key entries and levels, right? So I'm gonna go here, a mark right here, because price rejected off here, right? Price did something at this level. Price made a decision at this level. Price decided, when price hit this level up here, price decided it's going to go down. It's never going to pass this level, right? So this is a point of interest right here, right? So this is our point of interest for right now, or bank level, whatever you want to call it, right? And this is the sniper entry right here, right? All right, so we have two bank levels right here, right? And do like this, boom. We have another one right here, right? And we have another one right here. Right? So you see price. All right, so the levels I just drew, those are a level of point of interest, right? Those are level we want to get into the market. Those are level we want to watch the market, right? So look, this is our first point of interest. Boom, it reverses off it. It hits it again, reverse. When it breaks it with so much momentum, it can't stop, right? So this level right now is gone. It's broken, it's gone. So we're above this level, looking bullish, right? So it breaks the next key level, bounces off the next key level, right? Break and retest. So it came back to this key level right here, and then it breaks through all of them and then reject. Right? The main thing you need to be looking on, bro, is just the pivot points. So if I'm here, if say for instance the market is here, right? Say for instance the market is here, right? We are looking at these two levels right here because this is the closest level to the market, right? So let me press play here on the replay. And press play here on the replay. All right, so these are the two key levels. All right, so we're back. Okay, so boom. Break, and then we're through. So we get a break of structure right here, right? So if we add buys, press play, and exit. Simple, like it's simple pivot. So if I buy here, I'm looking to exit here, right? Vice versa, right? So enough confluences. We're gonna actually look at the forecast, right? We want to see what the market is gonna actually do when it opens on Monday and play out Tuesday, right? So I'm gonna let that play out. I'm gonna roll up a weed and get to the analyzation. Hold on, let me check the chats. All right, guys, give me a second. Give me a second, guys. Finna roll the ZA up, right? And then gonna get back onto this. And then we're finna get back onto this, guys. Yo, what you learned so far, bro? We here talking about key levels. You know, you gotta tell me if you're understanding shit I'm saying or what you wanna know. All right. Okay. All right. Let me sit my chair back a little bit. Great, bro. Great, bro. Great, bro. Great, bro. You know. All right. So while I roll this weed, bro, let me tell you. You see, all right. So you see on the higher time frames, like you have 5 minute time frame, you have the daily chart, you have the weekly chart. The weekly chart, each candle tells you what it does in a week. And say for instance, I'm on the 5 minute chart. Each candle you're seeing tell you what the price does every 5 minutes, right? So what I like to do is look at the bigger picture, right? So the banks slash institutions, you know, the market makers, the person that really moved the market, the person that moved the market, make you see it go way up, way down. You feel me? The person that are trading millions. Those are the banks, right? The time frame they use is the daily time frame, right? And they use key levels, support, and resistance. Trading is that easy. You know, it comes with a little bit more. I can't even explain. It comes with a little bit more than that. You need the experience, but if you should know key levels, right? Key levels, and then when you understand key levels, then you're gonna start understanding liquidity, right? So why these levels are called key levels are because, let me explain what liquidity is. Liquidity is what the market needs, right? Hold on. All right. So liquidity is what the market needs. Liquidity makes the market move, right? Liquidity makes the market move. Okay? So if we're down here right now, right? If we're down here, if we're at this level right here, we need to look where the liquidity is at. We have liquidity below the level. I'm gonna draw my liquidity object right here. This is how I draw my liquidity, right? That little arc is where all the liquidity is sitting at, right? Liquidity consists of stop loss, buy stops, sell stops, you know, just orders. The market go where orders are at, right? So I just marked two arcs, right? And these are liquidity pools, right? So this is where the liquidity is at. Okay, so that's liquidity pool, right? Let me set this up for you a little bit, man. Okay, so these are where the market is gonna go one way or another, right? The market has to go to these two zones, right? So a liquidity pool is okay, so a liquidity pool is above and below the zones, right? So the arc where you see that's where all the liquidity is. So price is targeting where the arc is, right? So all right. So price can do one or two things and then push up, or it grab liquidity from the upside and then push down, right? But either way it goes, it needs liquidity, right? Retail traders, like just like how you just starting out, you're not gonna know the term liquidity, right? But it's a really important term that, you know, it's an objective I gotta meet for each trade, and you'll be more successful if you meet the objective of liquidity grab before each trade, right? So right here, I see some liquidity grab down here. How I know it's liquidity grab? Because I see price move down below and then came straight back up with a wick, right? So let me try to zoom in on that. Try to zoom in. Let me try to zoom in. Try to zoom in on it. So price went below this level, right? So this is the daily sniper level right here, right? So this is, see the box ends, that's the level. So if you see the candle close below this level like this, if you had seen it close below the level like this, hold on. Let me draw a candle here. Okay, so imagine this is a red candle, right? So instead of price did this, right? Instead of price did this, price did this, right? So let me show you, let me draw that again what price did. So instead of price did this, it did this. Right? So it stopped right here and then it gave a long wick to the downside. Right? So let me show you. Let me get the highlighter right here. This is a valid breaker structure, right? And this is a liquidity grab, right? Keep in mind, our key level here is this level right here. Let me put it in green. That green line is our key level. Let me put it in blue because the chart are, let me put it in pink or yellow. All right. So I put the line in yellow. Yeah, yellow. Right? That's our key level. Our key level is right below this box. And if I should draw the highlighter, this is our key level. This is our key level right here. So we have two different candles right here. This one closed below the key level, and this one went down, came back up, and closed above the key level. Right? So I hope you understand what I'm saying. So the second one is a liquidity grab concept. Understood? So once a candle goes below a level, come back up, that's a form of liquidity. Yeah. So how are you understanding liquidity so far? Yeah, bro. You know, share the knowledge. Everybody should get rich, you know, because it's a whole lot of money out there, bro. Whole lot, bro. What you understand of liquidity so far, bro? What you understand of liquidity so far, bro? What you understand liquidity, bad? So yeah, basically, if the candle closed below the zone, it is going continue to the downside. Okay, so you have that right. But listen, how we navigate the market, you see, just like I just made that rule, when the candle closed below, it's going to continue to the downside. 99% of the time that happen. But the fuckers that make the market not gonna make it happen 100% of the times, right? So when you see a closure below the level, you know that, okay, I'm 99% sure this shit is gonna continue, but you have a 1% chance it can do something it never did, right? Because it's the market. The market doesn't do what you want it to do, right? It does what it wanted to do. But we have these confluences and these patterns and these, that we see every time. But 99% of the time, when it closes below the level, it's going to continue, right? So what I suggest, bro, you're starting out, you have the 15-minute time frame, 5-minute time frame. You leave that shit, bro. Don't trade no smaller time frames, right? The bigger the time frame, the more accurate, the more easier, the more better, right? Because that's what the banks trade. So if you should trade support, resistance, liquidity, and all on the daily time frame, you'll be way more profitable than on the smaller time frame. Because on the smaller time frame, like it's way more volatility. Like it take a whole day for one of these candles to play out because we're on a daily time frame, right? And on the 5-minute time frame, it takes like 5 minutes for a candle to play out, right? So you're gonna be way more accurate on a daily time frame, but it's gonna take like way more time to get an entry, right? You're gonna wait like 3 days to enter a trade, probably a week to enter a trade. You might be stuck in a trade for a week or two, but at the end of the day, that's called swing trading, and it's more accurate, right? And that's what I suggest. I'm a scalper, but I suggest swing trading all the time, right? So yeah, nice little lesson on liquidity grab. You just have to use that. All right, so this is the 1-day time frame. So that's how liquidity grab would look on the 1 day, right? So let me show you how liquidity grab would look on the smaller time frame. It would look like a breaker structure. All right, so look. Say this is a one. I'm gonna draw a 1 hour candle, right? A 1 hour candle. This is a 1 hour here, right? That's a 1 hour candle right there, right? And in 1 hour, there's 60 minutes. So you're gonna have 60 1-minute candle in this. So if I should draw the 1-minute candle right now, I would have to draw 61-minute candles to fill this out, right? So if I should draw a 30-minute candle, it would look, so this is 1 hour, right? And if I should use a 30-minute candle, it would look something like this, right? It would look something like this. It would be 2 candles. If it's a 30-minute candle, it would be 2 candles for 1 hour, right? So this is the 1 hour candle to the left, and I'm drawing the 30-minute candles to the right. Right? I'm drawing the 30-minute candles. 1 second, guys. All right. So on a chart, these are the same thing, but these are 2 different time frames, right? So on the 1 hour chart, this is how it would look. On the 30-minute chart, this is how it would look. Right? So you have to always keep time frames in mind. Like, you have to know that a different time frame is a different structure, right? So the higher time frame, the better. So you're on the 1 hour chart, this is how the chart, each candle gonna look. Right? If you're on the 30-minute, this would be like the 1 hour, right? You get what I'm saying, bro? So if we see a liquidity grab on the all right, so let's say we see a liquidity grab on the 15-minute, right? And we're gonna draw, we see a liquidity grab on the 15-minute, so we're gonna try to see how it would look on a 5-minute, right? So I'm gonna draw a liquidity grab on a 15-minute chart. So we just did 1 hour and 30-minute. So I'm gonna draw a liquidity grab on the 15-minute chart. All right. This is a liquidity grab on the 15. So if you're on, this would be the 15. So where if you're on a 5-minute, this is how it would look. We would have 3 candles. 1, right? And we have 2. All right. And we have 3. All right. So that's how the 15-minute would look. And these how 3 5s is in a 15, right? So this is how the 5-minute chart would look versus the 15-minute, right? So if we have a liquidity grab on the 15-minute, this is how the 5-minute looks, right? Once again, if we have a liquidity grab on the 15-minute chart, so we're seeing this on the 15-minute chart, right? This is how it would look on the 5-minute chart, right? Yeah. So that's easy. That's basic, bro. You know, running over some basics. All right. So let me get rid of these, bro. And then we're gonna do some real forecasts. So let me ask you something, bro. Like, you ever open a live trading account? You ever open a live trading account, bro? All right. So look, This is what we finna get into, bro. You finna mark the daily. All right, so you're gonna learn a little bit of market structure right now. I didn't see your answer, bro. You say message retracted. Right? Gonna do some market structure right now. Market structure is like how to, like, say for instance the market is in a downtrend, you know. You wanna know the structure of the market, where it reverses, where it go back down, you know, etc. Alright. Moving on to market structure in a minute. Waiting for you to answer that question, bro. Alright. So let me just move on to market structure, bro. Okay. So we're in a downtrend right here, right? We're in a downtrend. You see the downtrend right here, right? It's a current downtrend. That doesn't mean we're just gonna sell, 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 right? We have to find the market structure. All right. So I just see your answer, bro. Yes. All right. Okay, so right here you see where the market is heading to the downside, right? It's a whole lot of bearish movement, right? Let me see how the video is looking. Yeah. And so it's moving to the downside, right? So we need to find where is we need to find where is in a downtrend you have strong highs and weak lows, right? So downtrend you have strong highs, weak lows, right? And on an uptrend you got weak highs and strong lows, right? On the uptrend you got weak highs and strong lows, right? So let's draw the first strong high right here. So this is where the downtrend started, right? So the downtrend started at the top right here. So this is considered as a strong high, right? So where the trend starts is a strong high. And I just marked that. All right. So where the trend started is a strong high, right? All right. Let me make the line bigger. So that's the first strong high, right? And then we're gonna see what this high did. It came down, boom. Matter of fact, let's do this. Mark the first legit strong high. Let me save this. Strong high. And boom. We have a next strong high right here. And then I'm going to show you how to recognize a strong high. And as we go, you see that these strong highs are corresponding with our daily levels. So that's why I mark my daily levels first. Right? So daily levels. Daily levels. So we have the strong high right here. So why we consider this as a strong high? Because this is a valid strong high because it took this low. So this right here is called a weak low. Weak low. Right? So that's a weak low right there. So that low is weak because so in a downtrend, we target the weak lows and we maintain the strong highs. Right? It's simple as that. It's literally simple as that. We break the weak lows and we maintain the strong highs in a downtrend. Okay? So this is the first strong high. Why is it considered a strong high? Because we did this. We break these lows right here. So this right here would be a low. All right? The market never did none of this yet. So we're right here in the market. So this is the lowest point, the most recent lows in the market, right? Right here is the most recent lows in the market. Right here is the most recent dip in the market, right? So that's our lows. So when we see a high take the lows, that's a strong high. That's a valid strong high. So normally when the strong high take the lows, like it just break and break and break until it feels like retracing. So when we do a pullback right here, this is the new lows, right? So we're going to mark the lows first. So we have a new lows. So this strong high took this weak low and created a new low, right? Okay. So I'm going to put weak low right there. All right, guys. You understanding so far, bro? Give me a thumbs up if you're understanding so far, man. All right. So we're creating market structure here. We're creating market structure here. Literally creating market structure. So boom, let's start from the top again. So this is where the trend start. We go down, create a lows, boom. We have the highest point, current point of the market. Then boom, we take out the previous lows. We take out the previous lows and go up, boom, and maintain the strong high. Once we maintain the strong high, it's called a strong high because it's not supposed to get broken. Anytime it gets broken, we switch to a uptrend, right? So we're currently in a downtrend because we're maintaining strong highs and taking out the weak lows. So that's how the market don't just go boom and drop, right? It goes down, up, down, up, down, up. So if it's going down, eventually it's going to be doing boom, wave to the downside, right? It's not just dropping to the downside. The best way I could explain it, right? is making a wave to the downside. You know, it's creating structure to the downside. So right here, it pulled back and then boom. We just marked this lows a while ago. We just marked the lows. And what did the market do? It took out these lows, right? It took out the most recent lows, right? Because we're in a downtrend. So this last highs, which we're going to call the strong high again, took out this low right here, right? So this is where we're at in the market. So that's the last place we're at in the market. So this how would enter the week and, you know, look for confluences and look for direction. Obviously, this is going back up, you know, and then I don't know where it's going, but I know it's going back up to create the next highs, right? So we have strong highs, right, coming down in the week lows. So a downtrend, we maintain highs and break lows. Feel me? So if we should look for a trade right here, we're in a downtrend, so we're looking for sells, right? If we're right here, we're looking for sells. So boom. We're looking for sells. So we're waiting until the market create a new high. So the market might do something like this. The market might come up, retest this daily zone right here, right? Or you can retest the trend line. That's why we draw the trend line, right? And then we're gonna take these lows. Okay? So if the market comes anywhere close to the last strong high, you're looking for sells. So the market is way down here. So what we should do is wait for the market to come close to the strong highs and get a better win rate on our trade. We're not just gonna buy it here and know that it's gonna continue the downtrend. You know, we're gonna wait for it to go to the strong highs, reverse, you know, and then we know it's still in a downtrend, you know, because the market changes anytime. That's the trick to it, right? Show you a trend and then it changes anytime it wants to, right? So we'd wait for the market to come back to the trend line. We use a trend line as a zone, you know, we use the trend line as a support, right? Resistance, okay? And then if it bounces off the trend line, we know this is where it's targeting, right? So that's how I know the market is gonna move from here to way down here. You know how much money I'd have made? You feel me? So like, that's how you really predict the market, bro. You feel me? Structure, simple market structure. This is the first thing you should practice, right? Market structure. Right? Market structure. And I'm gonna do some back testing right now. I'm gonna do some back testing. So back testing is like when you play over the market, right? Like we bring it back like a couple weeks or week or two, and then we start over the market, right? Like we just act like we're trading in real life, but like we're trading in the past, right? So let's start from Tuesday. right? Let's start from Tuesday, 6 o'clock in the morning. So we're gonna start from September 12th midnight open. So boom. It's actually analysis for NASDAQ this week, right? So I'm gonna cut it off there, guys. Yeah, I might go live tomorrow. Catch you guys. I'm on post anytime going live. Peace. Finish this back testing first. Finish this back testing. But subscribe, guys. Like, so you guys get notified when I go live. You feel me? I'm gonna call it a day right there, right? I'm finna start trading around.